Okay, so we're going over the risk management, right? So twin trading. Right, we know that we can risk anywhere from 1 to 3%. Awesome. So let's say this trade we actually want to risk 3%, right? What we can now do is split that percentage up to 1.5% and 1.5%. Right, so at the same time, this whole trade sequence is worth a total of 3%, but when you net, you'll net, what's this, 1.7, 1.5 times 7, this turns into a 10% gain. And this one is what, a 1 to 4? So 1.5 times 4%. So this one is actually a 6% gain. Right. So you've been able to maximize your total return 16% if you risk all of it while only risking 3%. Right, so that's the power of twin trading here. But the only thing is, okay, sometimes notice how it came up and hit the first level, it might not hit your second level. Right? So, you know, at the end of the day, it's okay. You're still risking 1.5%, and if it goes in your favor, great trade. But that's the only thing. Sometimes it won't just come up and hit that second level, which is all part of trading, right? And it can come up and not hit it by like a pip. But at the end of the day, right, you still executed good risk management. This one turns out to be a 6% gain. Should be very happy with those returns. Does that make sense? Awesome, yeah. Awesome, right? And you can do this twin, you can do this try, right? It all depends on how you divvy up the percentage, but this is probably the most important part here.
Do you pay for TradingView?
I have the free version.
Oh, okay. So I was wondering, like, if once you're like trading, you have to get a TradingView, like subscribe to it.
Nah, I'm a
I don't know if anyone. I never knew like if anyone ever paid for it.
Yeah, Shamar uses it. He pays for it. He uses it, and honestly, it helps a lot. Like when you're back testing, because you can just replay scenarios, and that helps a lot with your back testing. But I'm a true believer of like, yo, you know, you can find everything for free and just maximize it that way. But yeah, hopefully this one kind of goes as good. Right, we're moving very nicely, going into London. What this can do here, and I want you, right, what this can do here is now fill up this gap, because what price did do was, so far it left a level of imbalance, right, at least on the hour. So what price is going to like to do is come in, retest that level of imbalance, and then from there, towards the end of the hour, hopefully continue dropping down. Right, so those are like little tricks right there that you can get, like as you, and you'll develop that as you continue to watch price and see how it prints and see how it reacts. But when you see a move like this and it kind of expands, you expect that little retracement back to fill that up, and then from there continue down to close the hour. The hour closes are probably the most important in my opinion. So if you can see how price reacts within the hour and start to take that, right? This right here is getting a lot of people to think buy, right? But if I go into the smaller which is a 5. This next red candlestick can just engulf it all the way down. Yeah, it probably wanted to rebalance off this. Close that up again maybe, and then start heading down. But once it breaks this here, it's all game over. If I could get a clear break underneath this, right where it held again. That'd be great, right? But yeah, so twin trading. Anything else we can? I know Samantha said she wanted to review points of interest, which do you mind going over that again?
Yeah, it's okay.
Yeah, cool. All right.